Hey, what's up, my friend? So in today's episode, right, I want to share with you a simple trading strategy for beginners, and you can use this strategy to trade the stock markets, FX markets, futures markets, etc. Okay, so again, right, this strategy, right, I won't say it is foolproof, right? You have to do the work to validate the findings, right, and make it work for you. So what I'm going to do is just to give you the big overview, the framework of this strategy, how it works, right? And if you want to, fine tune it to your needs, right, feel free to do so. Okay, so again, please, right, do your work, do your homework, validate it, and don't take anything that I share with you at face value. Okay, so first thing first, right, a simple trading strategy for beginners. There are three things that I look for, right, whenever, I want to teach something that is of a beginner level. First thing is that the strategy has to be easy to spot. Because if someone is new to trading, right, their eyes are not tuned into the charts. They're not tuned to the price action. So they will have difficulty, spotting quote-unquote patterns in the market. So this is why, right, it has to be easy to spot. That's the first thing that I'm looking out for whenever I'm teaching something of a beginner level. Number two, the trading strategy must have a logic behind it. Because if there's no logic behind it, right, any trading strategies that you trade, right, you won't have the conviction to continue trading it. Because when you go into a drawdown, right, you start losing faith in the system, right, you will abandon it, pretty soon. But if you understand the logic behind it, if you understand why it's supposed to work, right, it's easier for you to stomach the drawdown and continue trading it, right, before, you get off the drawdown and, reach new equity highs. Okay, so you must understand the logic behind the system. And the third thing is you must give it time, right, for the trading setup to unfold itself. This is important, right, especially for new traders, right? If the setup occurs so fast, right, they won't have enough time to react to it, right? So we want ample time, right, for this trading setup to occur. Okay, so let me share with you this particular trading strategy, right, that is beginners friendly. Number one, the first thing that you want to look for is for the market to be in a range. Okay, at least 80 candles or more. So I'm sure you know what's a range, right? It's contained between the highs and the lows. So within the range, right, you want to see at least 80 candles in it. You can manually calculate it, or use a tool to help you tell you how many candles are in the range. And the reason for 80 candles is that it makes it easier, right, to identify the highs and the lows of the range. Because when the range is happening for a longer period of time, right, it's easier to spot support and resistance inside of it. So this is why we give it about 80 candles. Now, you don't have to be too anal about it. Sometimes if you have 75 candles, it's fine as well, right? Just focus on the concept down here. So now once the range, right, is about 80 candles, what you want to do is for the price to reach either the lows or the highs of the range. If the price is in the middle of the range, there is nothing to do. So take your hand away from the mouse. There is nothing to do if the price is in the middle of the range. You only want to get concerned, right, if the price reaches the outer limits of the range. Either it could be the lows of the range at support or the highs of the range at resistance. So now let's say, for example, the price has approached the highs of the range at resistance. Great, this is where you should be paying attention to. The next thing you want to look for is for the market to make a false breakout. So this is something that is pretty simple to spot. The price breaks out of resistance and you thought the move is real. But hold your horses yet, don't buy just yet. Okay, what you're looking for is for the price to break out and then make a sudden reversal and close back within the range. So you can imagine, right, price breaks out of the resistance. The next few candles, either the next one candle or the next two candles, it suddenly collapses and close back under resistance. This is what we call a false breakout. When that happens, right, this is where you trade, right, in the direction of the false breakout. So meaning if the price breaks out and then closes lower back inside the range, you're looking to sell this market. You want to sell on the next candle open, right? Your stop loss can just go above the highs of the range, usually 1 ATR above the highs of the range. Okay, so in essence, what you're doing is that you're trading false breakout. In essence, you're just simply profiting from traders, right, who buy the breakout and then got their direction wrong. Okay, meaning it's a false breakout, so you are trading in the direction of the false breakout. You are profiting, right, from traders who are trapped when buying the breakout. Okay, so once you have entered the market, right, you place a proper stop loss. Where do you take profit? So very simple. You know that your range is contained between these highs and these lows. So clearly, right, if you sell near the highs on a false breakout, then you can look to take profits near the lows of the range. So one tip I have for you is that don't try to take profit at the extreme lows of the range, because the market might not get to that level. So give it some buffer, slightly above, a bit higher. So there's a good chance of exiting the trade as a winner. Okay, so this is generally how this trading strategy works. I call this the false break trading strategy. And one tip that I have for you is this: go with a time frame that you are comfortable with. Because if you imagine this, right, 80 candles on a daily time frame, it takes 80 days for it to play out. It may or may not be too fast or slow for you. I do not know what's your your circumstance, but for someone who trades this on a 1 hour time frame, 80 candles is just 80 hours, which is just 3 or 4 days. So the time frame matters. Pick a time frame that you are comfortable executing the trade, right, where you have enough time to monitor the market, to plot your highs and lows of the range, and then see how the price reacts at the highs and lows, and then if it gives you a false break setup, you can trade it. So pick a time frame that is relevant to you. Okay, and another thing is that for those of you who trade off the higher time frame, like the daily or the weekly, I'm sure you can agree that such trading opportunities doesn't come very often because it takes time for the range to form. So a tip for you is to trade more markets, right? So you can trade stocks, you can trade FX, right? Exposed to different markets to have more trading opportunities, right? This will be relevant to you, especially if you're trading off the higher time frame, like the 8-hour time frame, the daily, etc. Okay, so with that said, right, I have come to the end of this video. A quick recap, right? This simple trading strategy, what you're looking for is, number one, to have a range of at least 80 candles. Number two, you want the price to reach the outer limits of the range. It could be at resistance or it could be at support, right? Either the highs or the lows. The third thing you're looking for is a false break. So wait for the price to break out of the range. For example, it breaks out of resistance and then suddenly collapse lower back within the range. That's what you want to look for, a false break. And number four, you can sell on the next candle open, stop loss, right? 1 ATR above the highs of the range. Okay. For targets, number five, you can look to take profit, right, just before the lows of the range. So what I've just described is based on let's say you are shorting the market. If you're going long, then it's just the opposite. Okay. So with that said, I wish you good luck and good trading. I'll talk to you soon.